Okay, awesome. All right, guys. Good morning. Good morning. Good morning. We appreciate you guys getting on the call on time. You guys know we had a phenomenal boot camp last week, which was really out of this world. And honestly, we just needed additional information for those who did not get to attend. And also because NLG is just powerful when it comes to IULs and annuities and etc. So today we actually have Mr. Blake that will be going over some additional information regarding NLG's products. So I'm so excited to have you. And without further ado, I'm going to turn the call over to you, sir. Thank you.
Yes, absolutely. Thank you for the introduction. I get many, but the point being is that I want to make sure that I focus on you guys today. I am also one of the guys that is usually frank. I am down to earth where you guys can interrupt me at any time if you have a question. If you want to put it in the chat before or during the conversation, that's okay too. But I want this to be easy to understand. I'll get right into the software as well to kind of show you guys how National Life has evolved in being number one in the IUL space. As far as the total product portfolio, we're pretty comfortable where we are position wise as far as the company, but I want to make sure that you guys are comfortable with us because that's all that matters. Follow me? All right. All right. Okay, cool. So my name is Blake. I am an internal wholesaler supporting Devin. And anytime he has a opportunity to allow me to do presentations, I normally do them for small agencies,
Okay, I'm
larger
gone.
agencies, and so forth. Hey, Linda. And I definitely, I've been here for a few years, but I have experience in the options market, derivatives when I first graduated college, bonds, you name it, indexes, ETFs when I was on the trade desk. And then now, before that, I worked for Lincoln Financial under mutual fund space. And now I've been with National Life Group for about 2.5 years. So kind of have an understanding of all different asset classes. So the best thing about this is that today we're focusing on the life insurance market and what makes National Life Group the best. So I'll get more interactive with working within the software frameworks, knowing where to go, where to look, as well as some of the competitive advantage information that not only makes us special, but makes you guys better than the competition out there when it comes to selling. Okay. Core financials. You follow me, everyone? Janice, Linda, Kai. Perfect. All right.
Absolutely.
All right. So first, I'll share can you guys see my screen here? National Vision. Perfect.
Yes.
All right. So first things first, you are dealing with an A plus rated carrier. Um, A plus rated carrier, top to bottom, our financial statement. Again, we're still A plus, although this says 2023, we're still A rated across the board. One thing you want to note, if you have a pen and paper, I want you to write this down. The most important part of the business is analyzing that you want to partner up with an insurance carrier that is A plus rated. The strongest piece of your book of business in the asset class that you sell, you want to maintain with the carrier that is strong, not one that is leaving the insurance business, one that is stable in every market that you sell. So imagine you have a distribution, and your distribution is clients that are teachers. Well, you want to make sure that you have a carrier that can support the everything that a teacher needs, not only just life insurance, retirement solutions. What about IRAs? What about traditional IRAs? What about Roths, simple SEPs, 457s, 403Bs? You name it. You need a carrier that's going to allow you to have the flexibility for the distribution of products to your clients. Okay. And you want to do that with an A plus rated carrier that is number one in the annuity space when it comes to flexible IRAs, Roths, and all the different simple and set plans. Number one in the market share for IULs, number one in insurance sales. And if you flip that number nine upside down to 6 or 7, that's where we compete as far as all the different insurance companies across the board. Okay. Now, you may say, oh, Blake, we don't care about all that fancy stuff. We want to get to the products and all that good stuff. Well, the thing is that the reason why that's so important is because it doesn't make sense for you to distribute your products with a carrier that doesn't have a product portfolio supported for every market. You have to, although we have different things that we're working on as a company, it is vital that you are comfortable with a carrier that has the flexibility throughout the entire product portfolio and not just one simple product. Yes, we do sell IULs. Yes, we offer annuities, but we're one of the few carriers in the annuity flexible market as well. So when it comes to attacking business owners, do you think business owners want to deal with IULs or do they want to deal with tax solutions, tax deductions, bigger tax deductions, retirement planning? You have to get into that business because that stability of that business is the reason why a lot of people are not putting money into their investments at this point in time. They need more money, more free cash flow, or be able to cut down on that taxable income that they have for the business or themselves. And what better way to do that than a carrier that top to bottom stands out? Okay. Now, I talked about us being A rated. I talked about the flexibility of our product portfolio. And before I go through this slide, I want to know what markets you guys in. It's only what 9 individuals in here, so I want you guys to unmute yourselves, and I want you to tell me which markets you're serving right now. And I mean markets, I want to know, is it the annuity market? Is it teachers? Is it truck drivers? What is your the market that you serve? Anyone?
Annuity.
Annuities. Okay. What else?
Retirement and general life insurance.
Okay. Joshua and Megan, I'll start with you guys. What's your average client?
Average meaning age or
Age profile, I'll say average client profile.
between 30, or for me, between 30 and 55. Um, Trying to move away from final expense so much, but of course, some people don't qualify. So then that's where we have the annuities, but really, really want to hone in more on, businesses, business owners, um,
Mhm.
more retirement focused.
Okay. Okay. Janice, you got anything? I know you have a big book of business.
Yeah, it's the same thing basically. We're targeting our age demographic, 30s, 40s, just because we're trying to reach these people before they reach retirement, so they're not having to live off Social Security disability. We want to help them get set up for
Me.
life
I
earlier
left.
than
I
others.
left my drink.
Hey, Linda, you're unmuted.
Oh, I'm sorry.
Linda, it's okay. We'll get you another drink. Okay.
Yeah, I apologize. I was running into my mom's apartment. But
Okay.
I'll answer and then I'll mute. I'm the
Yes.
same. The same. I'm coming from Medicare and senior. Dealing mainly with seniors and making that pivot into general life and of course IUL. Not annuities yet, but hopefully soon.
Okay. Okay. Cool. Cool. Megan, do you have anything? I know you were the first one to say annuities.
Generally, like mine are the 40 to 60 range. I
Okay.
do a lot of rollovers.
Okay.
That seems to be what I do, my
Gotcha.
niche. So,
Yeah, that is a honestly that's going to be and I'll talk about that in the presentation before I get into the agent portal. Um, Key thing is here, guys, and the famous women across the room here. Annuities is a hedge against life insurance. Annuities is sticky business. Rollovers. Once they roll over their 401k, it's hard to roll it out again, right? You also have larger percentage opportunities when it comes to earning potential. $200,000 rollovers become really, really lucrative for you guys. IULs are sensitive to what I would consider they're not needed like an annuity or a rollover. And the reason why I say they're not needed is because the people that you serve treat it as an afterthought. They would rather cancel their life insurance policy than cancel their Netflix account. When things go wrong, they're keeping their Amazon Prime and they're cutting the cost of the product that you sold them. So they're going to drop the premium down to a minimum. That's what you're offering to people. So you have to know how to manage your life insurance book because having that client, understanding what they do, how they work, how many kids they have, understanding their full scope of things and being able to forecast why this IUL is going to be so important. Because again, when things go wrong, they're taking their disposable income and keeping their retirement account, which is the 401ks and the annuity side, And then they're looking at this IUL that's costing them $300 a month, and they're like, I need an extra 150. Well, what about cutting Netflix, Amazon, uh, Postmates, DoorDash? What about all of that stuff? What about changing instead of taking eating escargot and all those steaks that you eat, instead cut down the Wendy's for a few months, right? Or at least cook at home. Again, the asset class of IULs, when it comes to offering these to your clients, if you only offer IULs and final expense, you only become a life insurance agent. When you offer both solutions, you become a financial consultant, and you become much more powerful and sticky to the business. And then opportunities happen where if you become more of a retirement planner, financial planner, or financial consultant, you start to become more valuable in different spaces, and people treat you like that. Because there's not a single insurance agent that can sell me or convince me on anything, because I do things in other markets, right? So imagine a CPA that you go up to, right? He has a client says, hey, talk to my CPA. As an insurance agent in insurance solutions, what do you think they're going to say? Right? You want to get to that business owner, business owner has a CPA. What do you think that gatekeeper is going to do to you and treat you like, compared to if you offered a retirement solution that is better than what the CPA is offering? You have to know retirement solutions just as well as you know the IUL market, because there are things that CPAs don't know about in insurance that are bigger tax deductions for a client or doctor than their normal expenses and the receipts that they deal with every day, right? So meeting a national need stands out, right? I've got it all the way to 10:30, correct? Perfect. Okay. So meeting a national need, right? Why is that so important? It speaks to the flexibility of our company and our products, but more importantly, you have 737 life insurance companies across the nation, right? And the biggest thing that makes us the best from top to bottom, or at least one of the top carriers, is the fact that we are not publicly traded. There is a different goal in mind when you sell a life insurance company that is publicly traded compared to a mutually held carrier. When they're publicly traded, they're dealing with quarter to quarter profitability, which means that their goals don't necessarily align with the agents. It actually aligns against you, because we're looking at it from a how profitable is our company quarter to quarter. And if it's not, we have to make immediate changes. Meaning every year or two, we change our CEOs. Every year or two, we're coming out with new products to replace our old products. Every year or two, we're dropping rates down. We're changing the rates pretty frequently, because what they're doing and comparing to is how valuable is this current product portfolio to our shareholders. And if our profitability doesn't knock up that share price, guess what? We've got to adjust our product portfolio. We've got to adjust our management. And so that frequent change doesn't happen with a mutually held carrier, because our alignment is with our agencies and our distribution. We only make products that our distributions can offer to be the best, right? And we don't change products often. Our Flex Life was created in 2019, and it still allowed us to be number one in the IUL market for a long period of time. Is it 2026 yet? Right? No? Okay. So that product itself is long. Our annuity portfolio is really strong. We have one of the highest GLEAR opportunities, or guaranteed lifetime incomes, for retirement income on the annuity side. And guess what? We offer all the risk management features with the life insurance policy there is. We're one of few mutually held companies that offers terminal illness, chronic injury, lifetime income benefit rider, Alzheimer's, and now a new fertility journey rider. You want the base of your book of business to be with a stable company that offers the most management solutions to your client, right? Um, and then you have to know again what's the product and how valuable it is to you and your client. How we've had this product since 2019. There are people that are starting to enter the IUL business, leave the IUL business. We're pretty stagnant in what we do, because we do it the best, or at least we do it the best in a way that allows the um, the lowest income client all the way up to the ultra high net worth client, the same product, right? And so you have that flexibility to be able to do that within the same product. And guess what? We have different products that align the same way. The software allows it to be pretty easy to navigate once you learn how to illustrate the flexible flex IUL. Okay, very important stuff here. I'm gonna skip ahead. Obviously, you guys know about the greatest wealth transfer in history occurring as we speak. My question to you would be, how much of this wealth transfer are you going to help with your clients, right? If it's $84 trillion that is donated, I mean, I said donated, $72.6 trillion that you can touch because you're living in an era where it's changing hands, especially with the political climate that's happening. A lot of people are being furloughed. The 401ks and the money is being either used or they hold it at their old job. A lot of people are losing their jobs. One of my, and I just dapped him up, one of my directors first told me when I first entered the business, he said, "Hey, every every company that fires more than 45 people, I think 30 people at a time, they have to notify the public. It's called the WARN report, WARN report. And so you get to see all the companies that are firing people, which means that all those old 401ks need to be changed over. See, I told you, well, I didn't tell you, but I usually tell
What's
people
it called? The
after
Warren report?
warn, like warning, but warn, WARN. If you
Yeah, and
have your,
that's just
if you
something
have,
that we can Google.
yeah, just Google it. That's it,
Okay.
right? It's pretty cool stuff, right? I learned that from being in the business on the corporate side. Just a cool thing to look. So I'm not saying that it's going to be easy to navigate, but there are people that have navigated that report, right, in their area, in their zip code, in their state. Some people have pulled up to the company, said, "Hey, look, we offer financial solutions. We'll help all these if parts of your benefit package when they leave, or what do you call it? The um I forgot what it was called when
The severance package.
severance package. My man Joshua, got you. The severance package, right? A part of the severance package, we offer financial planning solutions to help people navigate how to. We'll do it for free, right? And there you go. There's an opportunity. I'm not saying that it'll work, but I'm saying that you have to get creative in how you assess and getting to these people because people once you get it and you master a process, it becomes much easier for you to get rich quick. And I say get rich quick because those things allow you to navigate a market that can make you really happy. Um, and then, like I said, I'll just go over briefly what the annuity side is. We have 401k solutions, IRAs, rollovers are big, based on the percentage compared to IULs. It's also sticky business, so you want to make sure that you are a part of that. We have solutions that create um, easy solutions for you to navigate. Are they looking for accumulation? Are they looking for income and so forth? Right. Very simple stuff. And then lastly, I know I got a lot of time here, but I just wanted to go over this. Growth Driver 10 is one of our annuity products that gives the client 10% immediately to their income. I mean, to their accumulation value. So if they have a $200,000 rollover, you can say, hey, look, I know that what's happening in the political climate isn't great. You have $200,000 at your old job. Here's what I can do. I know the market is in turmoil. You've probably lost $10 to $15,000 already. How about if you roll this over with me, I can give you $20,000 immediately and I can protect your money with no fees. And it can still grow up to 7.5%, right? What that says is the product gives 10% as soon as they move the money over. The rates on it are 7.5%, and they will never lose a penny because there are no fees on it. Who would like an extra 20 grand to start off from a rocky start or a rocky leave from their old job, right? You've got to get creative in how you market the products of the companies that you sell. Okay. So With that being said, we do offer quarterly commission solutions as well. We want to be mindful of that. So that is very important. And again, I'll show you guys as much as I possibly can when it comes to the annuity side. But we're here for IUL, right? So what I'm
Blake, can
gonna
I
do?
ask a quick question though?
Yes. Uh-huh.
I'm sorry about the annuities. So if they want to set it up as a Roth IRA tax code,
Mhm.
how how does that differ from the traditional? Like, I guess that's where I'm confused. I have somebody that wants to roll over actually 529 plan. So it has to go in as an IRA. But what are the how are the tax implications
So the
worked
so the
out?
fi- so is this an old 529 for their kid that they
Yeah.
didn't use? I figured.
Yeah.
So they can roll over a portion up to the max into a Roth IRA. It's simply so when you get into the annuity side, remember you got asset class, which is IUL, which is whole life, which is mutual fund, which is CD, which is annuity, which is MIGAs, which is any financial product, which is technically the investment, right? Those are
Mhm.
asset classes. When you speak of 529, Roth traditional, those are all tax qualifications. So when you move from 529 over to Roth, right? What they're doing is they're allowing you to convert that 529 opportunity because it's after tax anyway, right? Put that after tax money over to the Roth IRA, roll it over, no problem. And now it's the investment is driven by the annuity, right? So the
Right.
rules allow for the 529 to roll over up to whatever the age of the person is, $7,000 a year for I think 5 years or so. But that's new. That's new. That's the 529 rollover from the Secure 2.0 Act. Um, but I'll send you some more guidance on it after this. That's pretty easy.
Please. I
Yeah,
guess as far as setting it up and how it will be taxed down the line,
yeah. It won't be.
it's okay. Okay,
Yeah,
that's what I wanted to know.
it's they're tax-free solutions. When it comes to Roth, anything Roth is tax-free withdrawals, whereas
So,
traditional is pre-tax.
so even though it's in driven by an annuity, it's not going to be taxed.
Yeah, correct. Remember,
Okay.
asset class is different than the tax qualification. You have the
Okay.
tax qualification that is basically the big house, and the investment is like the car you drive every day, right? The car you were driving at 20 is not the same as the car you're driving at 45, right?
Right.
After you
Right.
make all this insurance money, now you got that Lamborghini compared to before you had that Honda from 1995, right? That my mom had when I was born, and that car was just as old as I was. So, with that being said, again, tax qualification versus asset class. Okay.
Thank you.
Okay. Let's give me 1 second. I'm gonna move over real quick to the life insurance side. That way, I'm gonna log into the portal real quick. Give me 1 second.
And while Blake is getting things prepared, I hope you guys are taking, you know, intentional notes. This is some really, really good information. Thank you, Megan, for speaking up because maybe that question is going to help someone else down the line. And I'm excited for all the information we're able to get from him. Um, this is really, really good stuff. So, guys, please be intentional. Please be studious. Soak up as much as you can and utilize some of the things that you're learning. I think Reginald posted about the Warren report in the Telegram. So definitely look over it. I'm reading it now as he's going along. Really, really good stuff. It's only going to make you better in your business.
Can you guys hear me
Yes.
pretty well? Do you hear
Thanks.
background noise?
No.
Okay, good. These headphones work. Gotcha. I
Yeah.
have our team meeting is around us. So all right. So here is your portal, right? And I want you guys to be mindful. I'm going to go through these things. I got about 30, 35 minutes to really, really hunker down on notes and what we offer and how to navigate and get comfortable with us. Okay. So are we familiar with the portal already? Is that
Yes.
has every perfect? Okay. So you guys know where to get your forms.
Yes.
Okay. You guys know our easy underwriting program.
Yes.
Okay.
Yes.
What about our underwriting quote software?
I love X-ray.
Good.
That's my best
Okay.
friend.
All right. Good. I got veterans. I just want to have a gauge of how we are. Okay. Good. All right. So first things first is that we have a platform that is very, very, very educational. Okay. So when you want to enter the small business market and you want to read about on it, all you have to do is go to our marketing advanced markets and get comfortable with our platform. Okay. Most agents who are comfortable with the basic stuff, they never go to our advanced markets tab. We have a full advanced markets team, right? Uh, that we are able to reach. So whenever you have a business owner, right? Simple and plain. When you have a business owner, all you have to do is fill out our qualified fact finder, right? Let me go here. Give me 1 second. Let me okay. I'm going to show you guys why this is so important. Okay. It's called the qualified fact finder. Basically, you have a team that is designated with us to help you navigate the advanced opportunities with a business owner. But first, you have to do your homework. Okay. Your homework is this form here. Okay. It's called the qualified fact finder. I want you to write that down. It is your key to being the most valuable person to that small business owner. You make them fill this out. You say, hey, look, I want to make sure I provide you the best information and the best opportunities. If you can, fill this information out accurately so that I can go to our CPA and our lawyer for free and we can draw up the best solution. Okay, here's why. I had an agent that I worked with last week that works in the PE space, private equity space, and he's on the board of a medical board. And as of right now, he had no sales with us. So I said, hey, you have a doctor. Lights go up in my head. I said, how close are you to the doctor? I said, we're in partnership together with the medical board. He really likes what I do. He trusts me. I said, okay. All right. Do me a favor. You're trying to do an IUL for $200,000 a year for 5 years. Great. All right. I said, hold on, hold your horses. Here's an opportunity. You can do that, or you can offer a pre-tax life insurance solution. He said, what? Pre-tax? His eyes went up over the phone. I can tell based on his energy, right? Um, and so I said, hey, fill this out as accurately as possible. And the doctor didn't fill it out accurately the first time. So I said, hey, you're close to him. Make him fill this out as accurately as possible. Because the most important information is the census data. It's the employees that he has. The doctor made $5 million a year, right? And he had 5 offices across New York, Connecticut, and so forth. So when he brought it back, I turned it into our advanced sales team. We have a solution for him to save him in pre-tax retirement, either a $500,000 tax deduction to his business and splitting that up into a cash balance plan where some of it is going to profit sharing, some of it is going directly into his retirement account and all the other different employees, right? Straight out of the business operating expenses, of the operating account. It's a pre-tax deduction for the business, 500,000, or the other bigger opportunity, which is $1.6 million tax deduction for his business through the opportunities of retirement solutions. It's called a 412(e)(3), and it's a cash balance combo with a profit sharing plan. that means that that's a $900,000 annuity check, and there's a $600,000 a year IUL or whole life premium for 5 years. Okay, which means that the solution that all I did is understand the relationship of you and the doctor, you and the chiropractor, you and the dentist, you and any business owner, right? Have the ability to offer these solutions, but you have to have a team to help you walk you through. However, you guys got to make sure that the relationship is sticky because what ended up happening is that we drew up the plan, $1.6 million deduction. We have to have a CPA with that client so that the CPA can make the client understand what's happening. And you say, okay. So the second meeting happened with me, our advanced sales team, CPA, doctor, agent. The CPA wasn't well informed. It's tax season. The CPA ended up saying, I don't have time for this right now. I got to go. It's tax season. What is this about? Um, and he said, I only got 5 minutes. Fire the CPA. It's my thought process, right? Because here we have a $1.6 million tax deduction that the CPA couldn't find, right? When you do these big retirement plans, the CPA should have been offered this opportunity to the client. So it puts you against them. Follow me? So it's imperative that you are comfortable with CPAs. Okay. This is me giving you guys the freest game ever. I don't mind it. I love training, right? It is powerful that you guys are comfortable with CFPs and CPAs because they can smell your nervousness across the room. But if you put them in position where the client can get a $1.6 million tax deduction, what ends up happening? CPA ends up getting fired, or they bring in another CPA, right? So we're working around that CPA, and we're bringing in another CPA to make sure that we can get the tax deduction. That's the big story. So understanding what it means to work with our team is also making sure you do the homework to be able to offer this opportunity to your clients. Okay. This is the big stuff. Once you get into this program and these solutions, you never leave. You elevate from final expense because the hardest opportunities are actually the ones that are less profitable.
What? They fired me. Hold on. They said we found out that you're looking for you. I'm sorry.
Yeah. So the again, once you move, and again, you don't leave the final expense market. It's still something that's lucrative, but you got to build out your team so that it's easy for you to handle the big stuff and not just the small pups. But you want to start where you want to start because running into business owners aren't often. So you've got to create that network. Go to 25 networking events a year. You can call all the construction companies in your area. You can call all the window ceiling guys. You can call all the contractor guys. You name it, there's an opportunity. Okay. I'm at 10:03. I wanted to spend 2 more minutes on this. We have a plethora of materials for you to read, right? It'll be so much materials that you'll feel like it's a rabbit hole. But take your time when you want to do this. Over the course of the next month or two, just pick your poison, pick an opportunity, just read, watch a video, right? I'm going to go to our training tab. Our learning library is crucial to the impact of learning, how we do business, right? We have a plethora of videos to show you and to work with. Our platform with our new marketing director is crucial. We have a podcast that is going. Estate planning with life insurance, right? IRAs, inherited IRAs now, and we're constantly updating this information. Okay. Doing business with NLG. It's crucial. This explains our entire process when it comes to new business. Training, okay? E-delivery, rewrites. The entire process is available to you. And most agents don't know that it's just going to training going to doing business with NLG, and you'll find every number to call, every video to watch, everything. Okay. This is pretty cool. Sales system. This is new. Oh, snap. Hey, look, I found out something new on our portal that we just added. Circle of Wealth. It's a financial planning software, right? And you click here to learn more. Here we're offering it. Pretty cool stuff. Okay. Now I'm going to go into the illustration software to get a little bit more adept at the illustrations, right? Um, okay. So, someone in the chat, uh, oh, Linda, you're perfect fine. That was all. If you have, I want you guys to tell me a little bit more about the easy underwriting opportunity in the chat. If you know about it, let me know real quick so I can know where you guys are and how you know about it. Uh,
I had a question.
yeah, go ahead, Janice.
Go ahead, Kai. She said she had a question.
Okay, yeah. I think Kai may be handling something.
Okay, we'll just move on. She'll get back to it.
Yeah. Okay. All right. So what we have here, are you guys comfortable with the IUL software? Thumbs up, thumbs down, sort of. Okay. All right. So what I'm going to do is I'm going to show you guys what makes you special, right? And what makes you different as an IUL seller or someone that is a life insurance agent, right? I'm assuming most of our agents are doing this. 30-year-old client, I'm using myself, right? 30-year-old client goes to death benefit and funding, does a min-max opportunity, increasing, right, for cash value, which is what most people are selling, right? They do a specified amount, $300 a month. Okay. I'm sorry. Switch this to monthly. All right. So I want you guys to pay attention to what this really looks like. So for a 30-year-old, in most cases, you offered them a cash value plan who's 30 and you gave them $98,000 in a death benefit. And when they need it most, which is during their lifetime, not actually at 65, you've given them a total of, let's go to 55, 305. Most impactful life events happen between 45 and 55. So between that time frame, you're looking at maybe 182,000 and maybe 305,000. What if they bought a house? Anybody can afford a house right now that is $185,000, right? Houses are more like in Dallas, houses are normal, good houses in good neighborhoods with good schooling is about $400,000 as of right now on a minimum. Um, so you're running into a scenario where you're not even offering enough life coverage for them to make sure that their house is covered when you're doing increasing. Secondly, your target premium, somebody in the chat write down the target premium, $769, right? $98,000 death benefit, $769. Great cash value play. And then let's say Blake does more fact finding and they have a kid, right? You can either use a child term rider or you can add on the other insured rider, right? 28. My wife is 28. I want to give her extra $300,000 of coverage, right? Permanent. She has her own policy within my policy. Target premium is 913. She has $300,000. I have 98, right? Let me give you guys a different thought. Still got paid $913, right? How about for this same person, you offer them what I've been challenging a lot of agents to do. It's called a multi-million dollar estate plan. It's called a poor man's estate plan, but I added the multi-million because this is how people sell this IUL. right? But when I have a conversation with a client, right, you guys don't know that APB is your competitive advantage. Okay? APB is non-commissionable coverage. So anytime you have face amount base face, right? Look at the target premium already, 769, right? Let's do min max, let's do level. Okay? Right now, in just the first scenario, by switching to level, you've multiplied your profit by 3x. 769 to 225, right? And this is $2,000 compared to $700 when you wrote up increasing. And you may say, hey, Blake, well, that person doesn't have cash value and you've still given them enough coverage, not enough to pay for a home. I say, aha, you're right. Let me make a change. I go to none. I add, let's even this out, 250, right? I add approximately 750. Target premium, $2,000. I've given them an extra $750,000 in APB. That person has a $1 million solution. And what's more important? Is it the 95,000 that I started with, or having them have an estate planning solution that covers almost everything with the cost of inflation in the future? Right? Because 15 years from now, $100,000 isn't even $100,000. More like 15 years from now, 3% inflation. That's not even real inflation. So it's really 7%. But let's say we go with 3%. 15 years from now, not only is the cost of goods worse, taxes is worse, right? Inflation is always worse, no matter what. Because 15 years ago, when McDonald's was selling the burger for an actual dollar, right? Compared to now. So I've offered a tax solution to your client who is 30 for the same price, except I gave him $1 million that he can take that and say, hey, my net worth is now worth $1 million. I've raised your asset allocation and your risk management portfolio to $1 million, right? Well, while you gave them 95,000. Cash value is great, but there are other risk management things that your client needs, especially if they're young. Here's another opportunity that I always say when I draw up something. Let's say it was 95 when it started, it rolls up to 387K when that person was 55. Cool. Let's take APB away. Instead of going to 95, let's go to 150. Right? Let's do 250. Target premium is still higher than what you're going to get paid. You gave them enough coverage to purchase a home. It's now a mortgage protection play, and you can see that there's cash value in the first year. Not a lot, but you have the ability to decide what you're going to get paid by cutting the face and adding APB. Still getting paid more than I was originally going to get paid, right? Now I'm increasing this cash value. It was 0 at first. Now it's 940. You gave him 375. Okay, cool. Now we can add spouses, business partners, the base insured. You can add to it. Permanent coverage, right? You guys got to get comfortable with the impact of having a policy that is tailored to your client, not just a system sale. This is a system sale because it's the most popular thing on TikTok. This is a system sale. 131. It's only 131 because I added the other insured rider, but you're selling a sales system, which is great, but your solutions aren't tailored directly for the client in front of you. That's where life insurance agents still, if they're selling the sales system, they're sticking to being a life insurance agent. They're not actually being a consultant to this person's family. Make yourself more valuable. And it's vital because we have 30 members on our sales team to help you learn about navigating this space. Here's another thing. Let's say that same client, $300 a month, great. Let's say you give him 95,000, 98,000 in the first year. He comes to Blake. I say 225. I go min max. I go back to level, right? I'm still getting paid almost twice as much more. I'm going to cut it down to 150 and I'm going to give him 350. Oh, that's too much. 500,000. I still get paid more. So let's just cut it even more. Remember, I'm working off 225, not 300. His budget was 300, right? This is too much. Okay. 809. I'm still above what I was going to get paid. I'm taking that other $75 and I'm going to term. 400,000 on that one. I'm going to take that same 30-year-old. I'm going to take specify. Am I moving too fast? No? All right. Good. I'm going to take 75 bucks and I'm going to offer this person a 15-year, $1 million policy with the other 75 or 20. His estate planning solution is now 400,000 plus 1.1 million. You gave him $1.6 million in risk management of an estate plan for the same 300 bucks. So your 300 bucks gave him 95,000. My 300 bucks gave him 1.6 million.
You also gave him protection for the living benefits because there's a higher death benefit for him to use later on in life for the living benefit program as well as retirement if he doesn't use it.
Correct. The risk management is there for my 1.6. It actually isn't there for yours. And they hold my estate plan much more valuable than your checkings account, IUL, right? Because in most cases, if I have a $95,000 life insurance policy, how much value am I holding to it? It's only as valuable as what you offer. But if I offer 1.6 million to one person and they do it and they listen, here comes the referral. Hey, this is the $1.6 million guy. This is the $1.6 million lady. She is real, right? And now your marketing and your branding is a little bit more valuable, right? And imagine if this 30-year-old kid is way better than what's expected. Like me, I have preferred. The only reason why I didn't get elite is because I got fatter as I left college. And I stopped playing basketball like I was playing in college, right? Uh, so, uh, you know, it's so important to give a young client between the ages of 21 to 35, getting them that term coverage so that they can treat it like some value. A term is only as good as the idea of it and the conversion time. Just because you sell a term, it actually is like fishing. The worst you can do for a client is sell them a term. And I say the worst meaning they should always leave with at least a term policy, especially if they're between the ages of 21, maybe like 25, because a 21-year-old is still in college, 25 to 35. They should have enough risk management for the next 15 years because guess what? Within that 25 and that 35 range, all the way up to 45, they have a lot of changes in career pathing, life, death, born, birth. Everything happens between that time frame. Life gets more stabilized the closer they get to retirement, and then health concerns end up happening between the ages of what? 45 to 55. So if you give them enough risk management to have, by the time they run into health concerns, they should be having enough assets. to convert that 1.6 million that they have, or 1 million in this case. Okay. Here's another opportunity that makes us special. I'm giving you guys the book now, right? I have 10 more minutes and I'll open it up for questions. Kid policies, juveniles. We offer up to $500,000 with no financial underwriting on the parent. Okay. So in most cases back then, what ended up happening was the parents had to have enough coverage to support the amount that they're asking for the kid, right? Well, we've increased our limits from 250 to 500,000 in the last year. We're comfortable as a company to offer that solution. Our easy underwriting program, as you know, and if you don't know, I'm going to go over it again. The numbers. We can offer all those solutions that I offered today within the framework of easy underwriting without them going to the doctor, right? You want to make sure that they don't have to do a P test, APS, whatever blood test, urine, you name it. All the solutions that I offered today, I stayed within the parameters because our parameters are so high. 2 million for term, 3 million for flex life. Here's a caveat though. All rate classes are available, right? 2 million to 3 million medical records will need to be obtained, right? And then anything above 2 million, 1392 financial questionnaire, so financial underwriting, right? But how many people actually need $2 million of coverage? How many people want $2 million of coverage for a low price, right? But it's only as valuable as what you say to the client, what you offer to them. How much do they believe in you offering them this much coverage? If you run into the opposite, oh, that's too much. Too much. The cost of inflation is actually really, really high. The inflation numbers are actually 7% and not 3. 3 includes the calculation of the mortgage market. You take away and add to real inflation. Real inflation is cost of goods, auto insurance, daycare costs. Those inflation numbers are closer to 9 to 15 to 20% increases over the course of the last few years. Home insurance, medical insurance, though that's real inflation, right? 3% is when they add the value of the real estate market and it skews the market to level it out. But when it comes to actual living inflation, auto insurance, home insurance, well, real estate taxes based on the taxes of the state, right? It's different. Cost of goods, eggs. Eggs used to be what? $2? I would imagine my mom talking about the price of eggs right now when I go see her, right? Water, eating out. Now they've added the tipping culture, right? So inflation is much more realer and it's closer to the growth. I want you to write this down. It is closer to the growth of the stock market because I would say that the stock market is gasoline to the fire of inflation. If the stock market grows 20, 30% in a year, or on an average 12% in the last 10 years, after 2008, 2009, 2010 crisis, right? And since 2012 to 2021 was the highest growth in the history of the stock market. If you don't know those numbers, just look at a normal chart between 2000 and 2000 today. You'll see a big, big jump from 2013 to 2021. And then COVID happened where people were spending more money because Trump allowed the Trump checks, gave us all money that I liked a lot, right? And we used it to buy goods to restart everything, right? But in reality is it also pumped too much of the money supply in the market, which is why we have the results that we have today. Because between 2012 and 2021, what ended up happening? Rates were low historically for a very long time, right? So it's not necessarily on, again, I'm apolitical, but the idea of what you see when it comes to pumping the money supply is a direct result of a crash of 2008 and a recovery from 2012 to 2021. So the reason why we're here today in 2025, where inflation is really, really real, is because of the fact that we haven't recovered from the huge increase in the market from the stocks, right? And the equities, right? This is just the equity side of Blake that I'm showing you. I'm just giving you the honesty. So don't take my word for it. I'm not making any recommendations, but understand that you have to know the political climate adjustments because regardless of what your client and what they're affiliated with, again, they're affected in a way. Oh man, I like the red. I like the blue. It doesn't matter because you can always use that as an advantage to offer an insurance, right? Are you comfortable with the political climate? Yeah, but I like who's in office, but yeah, but like eggs cost $8 right now. Oh, are you comfortable with the market right now? Well, I don't like who's in office. Eggs still cost $8 right now. So you're gonna win regardless. How you use your marketing and the products is how you become a better financial consultant. Open for questions.
I don't have
Co-
any questions, but I would definitely say great presentation. I appreciate all the information. I mean, from the last talk we had to this one, I mean, you keep me fired up, and I appreciate it. Thank you so much for the knowledge.
Yes, thank you. I don't have any questions. No tomatoes. All right. If I did bad, throw a tomato in the chat. If I did good, at least give me some thumbs up, something. Questions, anything? Are you guys speechless or something? Nah, there's no way. No, okay, cool.
I
Cool.
think
I
they
am
may be speechless. I think they're a bit speechless.
okay. All right. Well, I'm open for any emails anytime. And again, once I do a presentation, I always feel comfortable with having another conversation with anyone who calls our sales team. Um, I
Yeah,
am,
I do have a question.
yes,
After we have a business owner fill out the fact finding form, the qualified fact finding form, do we
Mhm.
contact you? You had a whole list of people that we could look up, but is there a
Mhm.
specific person in mind that you would really have us go to when it
Yeah,
comes to helping a business owners?
yeah, we actually, so on the form, it tells you what email to send it to, like QDM at National Life. That's our basically the general box for the advanced sales team. But you want to CC a sales associate in or me. I'm actually moving over to our retirement side too as a senior relationship manager. So I'll be focusing on like the 4B, thank you, the 403B side. But more importantly, I'll be working with Devin and other distributions to help them get into the teachers market for the East Coast and or the Midwest. And so, yeah, CC me in. I'll forward it to the right people, and then again, we'll have like everyone on our sales team gives the resources that are needed to agents. It's just about uh, as like you got to think of it like this. And I got 2 minutes. You guys technically are a distribution force for our products, right? You guys distribute the products because you guys meet the client. I'm B2B. I help you guys train you guys on anything that is coming up that I find out. It's a partnership. It's a direct reflection of the partnership of how our company is structured. Whereas I'm not chasing you guys for dollars. I'm actually consulting you to help you grow and scale your business, right? And that's kind of what we are. That's the model from top to bottom is consulting. We have a true partnership and alignment as far as the structure of the company. So it makes sense to also consult you in that way so that we can get you in new markets to help you build your own distribution. So you're helping every client possible. So, yes, use us as a resource to help you grow and scale your business, not just products. And that's where life insurance agents fail. They use carriers just as products. And they don't realize that our company has been around 176 years. I've been with National Life for 2 years, and I've learned all this information to train people that are much older than me, that have been in the business 30, 40 years, and they have the same questions as an agent that is 1 year in the game. I'm like, oh man, how? Well, it's because National Life Group is considered in my thoughts, is considered an Ivy League insurance carrier. And that's where we're getting the game from. Okay, so utilize us in that capacity, and we will bring more business to you because we're that partner and that partner and that angel on your shoulder. Cool.
Thank you
All
so
right.
much for all the information. I know we're right at the end of the call. While we have 1 minute up, I think our minute expired. No questions at all from Mr. Blake. Do you guys have any last minute questions? All right. You guys unmute yourself and give him a round of applause, a woohoo or something, and thank
Thank
him
you.
for his time
Appreciate
this
it.
morning.
Thank you so much, Blake.
Woo! Thank
Thanks,
you.
Blake.
Thank
Thank
you.
you so
Appreciate it.
much.
Thank you
Yes.
so much. Thank you. I
See you
really
later.
appreciate it. We'll be talking soon.
All right. All right, Josh.